Sometimes when the opportunity presents itself, you need to be ready. We had the best quarter the mine's ever had. Record production and record low all-in sustaining costs. I think it's very important that we keep doing that for the balance of the year so that we can look at a more sustainable way of returning capital to shareholders at the right time.
Okay, but you've now also created a problem for yourself, haven't you? What are you going to do with that cash to create accretive value for shareholders going forward? Because it gets harder and harder to grow. So what's the plan? Hello and welcome to Crux Investor. First of all, thank you so much for watching this video. If you like it, please give us a thumbs up. It'd be much appreciated. And of course, leave your comments below. It helps us understand the sorts of questions you think we should be asking, how you think we're doing, and of course, what you think of the company. And don't forget, you can also listen to this as a podcast on cruxinvestor.com, where you can also get it as an article and in transcript form. And of course, for Crux Club members, I should say, you get early access to this video. And if you haven't already done so, please click the button in the corner of the screen. And of course, for more videos like this, click the notification bell. We spoke earlier today to Greg McCunn, who is the CEO of Galiano Gold. It used to be called Asanko Gold. They are a TSX and NYSE listed producer. They have a project in Ghana, Asanko Gold mine. This is a joint venture with Gold Fields as well. So this is one of the stories that we have been most excited to hear, and we weren't disappointed. Greg actually came back into the company about a year ago and changed things around. He changed the mentality from being a producer of ounces to being a producer of cash. And they just happen to be now sitting, as a result, sitting on a lot of cash, which has given them optionality, somewhere over 50 million bucks, plus their free cash flowing. So we're talking about what the options are for growth. They're focused on optimizing what they've got, looking to reduce the AISC by about 100 bucks. They've also looking at exploration. They're sitting on a huge land package and are going to spend about 10 million bucks this year to see what they've got. Take a look in the description below at some of the many other topics we discuss, especially around the business model. If there's anything that you want to spend some time on in particular, click on the number. That's a timestamp, and that jumps you straight away to that part of the video. But enjoy what Greg has to say. Greg, how are you doing, sir?
Doing well, thank you. Thanks for having me.
Fantastic. Well, thanks for joining us. You're another Vancouver. You're a third Vancouver person today. I should have moved there or something.
Yes, well, as you can see, we are sitting back in the office here today. Yeah. So we're just started slowly creeping back to some semblance of normal.
Well, that's fantastic. Good. Well, look, news story for our audience. We were meant to meet in London. Something came up, which meant that we couldn't travel. We won't mention it. We won't mention the C word. Why don't you give us a 1-minute overview of the business, and then we'll kind of pick it up from there.
Absolutely. So Galiano Gold, Greg McCunn, I'm the CEO. We're a producing gold mining company. We operate the Asanko Gold mine. It's located in Ghana in West Africa. So the mine is a 50-50 joint venture between ourselves and Gold Fields, with Galiano as the operator. So we're paid a management fee to operate the joint venture. The mine produced about 250,000 ounces of gold last year at an all-in sustaining cost of around $1,100 an ounce. We're expecting more of the same this year, and we can talk a little bit more about our guidance as we get into it. The mine's been in commercial production for about 4 years. We built this mine and put it into production back in 2016. Shifting more to the corporate side of things, we do trade on both the Toronto Stock Exchange and the New York Stock Exchange under the ticker GAU. I think when we walked into this interview this morning, our market cap was about 250 million US. And we have a reasonable treasury here now. We put together, our balance sheet has been repaired, which I'll also get into, I think, over the last year. We're sitting with just about 54 million in cash and no debt. So in reasonable good shape as Galiano Inc.
Fantastic. What a summary. That's a perfect summary. Couldn't have done better myself. We always like to kick off with new companies for this audience who are new to your story, and get a sort of sense of how you've gone about doing this. I mean, first of all, we sort of need to mention the name change in case people get confused. That's a recent occurrence. We'll come on to that and the reasons why. But give me a sense of what you originally set out to try and achieve. Okay, so you've been in production for 4 years, but there was a bit to it before that point. So what was the team set out to do? What did you think you'd be able to build? And indeed, were you able to stick to that plan?
Yeah, absolutely. Well, maybe I could just give you just a little background on myself and sort of how I got here. And I think that does help fill in some of the gaps as well. So I'm a metallurgical engineer. I've spent the first half of my career mostly working in technical and operational roles, predominantly in base metals, in zinc, nickel and copper, mostly with a big Canadian company here, Teck. It was Cominco and became Teck Cominco over the years, and now Teck, both in Canada and in Australia. When I started working, my first corporate role was after I completed an MBA, and I started working for Placer Dome, which was a big multinational gold mining company here in Vancouver. Produced 5 million ounces of gold a year. I was working in corporate development for several years in the early 2000s, until we were taken over by Barrick, which is a time when I sort of shifted in 2006 more to working in junior mining, and that's when my career took a little bit of a different turn. I found myself as the CFO, if you can believe it, which is an unusual role as a metallurgical engineer. But I found myself as the CFO of a junior mining company called Farallon. We raised a couple $100 million. We built a mine in Mexico. We put that mine into production back in 2008. It was a high-grade underground VMS deposit. And we ended up selling that company to Nearstar, the world's largest zinc producer, back in late 2010. And so from there, I moved on to become the CFO of what is effectively now Galiano. So the company was called Keegan Resources. We were an exploration stage company when I joined there back in early 2011. We were able to put together a merger with an Australian company called PMI, which we then changed the name of the company to Asanko Gold. We built what's now the Asanko Gold mine. We raised several $100 million to do that, put the mine into production, and started commercial production in first quarter of 2016. And after a year of operating the mine, I actually left the company, and I had an opportunity to become a CEO. And so one of the reasons that I became a CFO in the first place was I thought it would be a good pathway to eventually to be able to run a company. It took 10 years as a CFO being there, but in a couple different companies. But eventually an opportunity presented itself. I was to run a small company called Alio, which you may know has been taken over by Argonaut Gold now, a Mexican-based gold producer with an interesting project in Guerrero, the same place that I had previously built a mine. So about a year ago, I was asked to come back to what was then still called Asanko as the CEO. And I think when you talk about where we're headed and where we're seeing ourselves have gone over the last year is, one of the reasons I came back was I saw an opportunity to really transform the company from a project-related mine building company into more of a sustainable business. And I think when you look back a year ago when I came and I joined, the company had been, the mine at that time had been running for 3 years. If you look back over those 3 years, there were some challenging times, but the mine actually produced about 300 million in EBITDA over that 3-year period. There's a good margin at the Asanko Gold mine. The problem was, and I certainly heard this from some of our key shareholders when I came back, was that we reinvested all of that 300 million, and in fact, most of our treasury back into the ground. And so the plans that were there in front of us as well envisioned continuing that investment. They were going to double the capacity of the processing plant, go from a 250,000 ounce producer to a 450,000 ounce producer. It required ore transportation infrastructure. So the foreseeable future in front of our investors was that was going to continue. And I had questions like, well, this isn't a real business. You're just taking all the cash flow that's coming out of the mine and putting it back into the ground. When are we going to generate some return for our shareholders? And so we really set about last year trying to change that narrative. And the company was in a difficult position because it had very little in the way of treasury. We'd run our treasury balance down to below $10 million, which is awfully difficult to run a mining company with less than $10 million of buffer in the bank. And as well, we lacked a credible direction where the mine was heading. We didn't have a credible life of mine plan that didn't envision a substantial amount of capital. And so I think over the last year, we've been able to rectify both of those things. And we really changed, I think, the narrative at the mine site last year, away from just producing ounces to producing cash. And so over the year, as we wound down our capital spending programs, and we were able to start generating cash flow. Certainly the rise in gold price has helped in the last half of the year, to the point where the mine was able to actually distribute, just make distributions to its shareholders, to the joint venture. In Q4 last year and in Q1 this year, we distributed $65 million, so $32.5 million to Galiano's account, and more of that is coming in Q2. So I think that has helped fix our balance sheet. As I said, we're now sitting with just under 54 million in cash and no debt. And during that period, we were also able to come up with a plan with our joint venture partner to develop the mine, making the most of the assets that we already had. So we have this wonderful 5.5 million ton per year processing facility, treats ore from multiple pits on a wonderful land package in Ghana. We've now produced a credible life of mine plan that doesn't envision a lot of capital spending. We've got a 10-year mine life here, and we published that in February. And so I think the basis has been reset, and now it's onward and upward in 2020.
I love that. I love that. So that MBA has paid for itself. Congratulations on that. No, but that's really important because
my strategy problem. To hear that from you.
Exactly. But it's really important. I've had this conversation twice today already, where you've got companies who are looking to reinvest any cash they make straight back in the ground, or by acquisition, further OPEX spend, etc. And they're in the mining business. They're in the business of producing ounces. They're not in the business of making money, which all businesses should be in. All businesses. I don't care if you're a sandwich shop or make bicycles or you're a mine. You got to make money, and people forget to do that. And that's a very common thread in a lot of conversations that we have with mining CEOs and investors in the natural resources space, where people forget that component. And I guess that's where the kind of lifestyle accusation is thrown at some companies, and big producers also forget this. So I think if you don't mind, because you touched upon a few different threads there, and I like that big segue from what the plans were to where you are, to the mentality. I think you said at the mine site, as well as throughout make it pervasive throughout the organization, to understand that it's about making money. So, and it's easy to say, we kind of changed a few things around, but what did you actually do? What actually changed from then to now? Because it doesn't happen overnight.
No, it doesn't. It requires some careful planning, really, is what it boils down to. And mining's a difficult business. It's a capital-intensive business that is an industry where we don't control the price of your product. So, that makes it awfully challenging through various cycles to be able to run a business successfully. So you have to understand what's coming and plan for it. And I think that's something that, over the last year, the biggest shift that we've made is away from, again, just focusing on ounces and focusing on trying to generate cash flow at a reasonable gold price. But bearing in mind that you are going to have to make investments. We do have a tailings storage facility that we need to raise every second year. We do have pits that require pushbacks and access to ore for an open pit mine, but the same would be said for an underground mine where you need to keep up with your development. So, the opposite mistake can often be made where you shift into harvest mode too quickly and you don't do enough capital spending, you don't do enough development work to be able to keep to really maximize the benefit of your asset in the ground, which is really, I think, the objective of the mining company, is to make money continuously, but realize that you're also trying to maximize the benefit of what's a once-off natural resource that you have to use the most effectively as you can to generate profits for your shareholders.
Okay, so I just love that. Okay, first of all, you've also distributed cash back to shareholders in the form of dividends, $65 million, not insignificant amount. That you kind of set an expectation there. So we'll see how that continues. Hopefully, it does continue. Is that the plan?
Yeah, so we're starting. We're starting to rebuild our balance sheet now at the corporate level where we've received those distributions, so that we can. You're absolutely right. Starting to return capital to shareholders and shareholders in Galiano now, and we started that process in November, where we committed to buying back our own stock. So we put $3 million back into the market, buying back about 3.5 million shares over the last 4 months. So that's a meaningful start for the first time to returning some of that capital to shareholders. And as we go forward, as we become more comfortable with our plan, where we've produced that life of mine plan in February. We absolutely adhered to that plan in the first quarter of this year, and we had the best quarter the mine's ever had. Record production and record low all-in sustaining costs. We're on track for another good quarter in Q2, so that'll be the second quarter that we delivered onto that plan. And I think it's very important that we keep doing that for the balance of the year, so that we can look at a more sustainable way of returning capital to shareholders at the right time, like like a sustainable dividend policy, for example.
Okay, but you've now also created a problem for yourself, haven't you? Because you've got cash. What are you going to do with the cash? Because if it sits there and does nothing, it's just cash. So people have expectations about the optionality which you've now given yourself by obviously restructuring the balance sheet, but sitting there on this kind of free flowing cash machine that you've got. But you can't, $1 is worth $1. What are you going to do with that cash to create accretive value for shareholders going forward? Because you're a big company now, whatever, $250 million. So, you're up there. It gets harder and harder to grow. So what's the plan?
Yeah, so I think at this stage, we really, over the last year, we had to fix the things that we talked about already before we could even contemplate what was next. And, now that we've got to that stage where we've got a credible plan in front of us, we've got really two initiatives. And I think the first is, the plan that we put together, as I said, making the most of the assets that we have is very credible. We can deliver on that plan. It's a decent life of mine plan. But we're really now focusing on the 3 to 5 year strategic business plan at the mine. And that's this planning that I talked about. To be able to consistently deliver free cash flow, you have to be thinking ahead more than just your annual budgeting cycle. And that's not something that we had actively in place. So we've been really trying to formulate that 3 to 5 year plan. And we've got two ways we can make that plan better than what's in the public domain now. And the first is through driving our costs down. And as I said earlier, mining is a business where we don't control the price of our product. So you have to be focused on costs. I think our business was set up to be, as I said, a capital spending business where we were looking to be a 500,000 ounce a year producer. So there's a lot of efficiencies that we can bring this year, and we're targeting a reduction in our all-in sustaining costs of $100 an ounce, which is meaningful. I know that's, put in perspective, that's $25 million a year in operating cost savings. And so there's a number of initiatives that are happening there that will involve us potentially reinvesting some capital in certain things, upgrades to some of our processing plant, et cetera, to try and bring those costs down. But predominantly, it's around savings in how we handle materials. So very limited amount of capital required to capture these savings. But the second aspect we are going to reinvest the money in is in exploration. And I do think that when we're looking at a plan here with a 10-year mine life, I do sometimes get the comments of, well, why do we need to do a lot of exploration when we've got 10 years of mine life in front of us? Why don't we just get a little further along the track? But the reality is the exploration we're talking about is not just to add years to the back end of the mine life. Now that will happen, of course, when you find more ounces and develop more reserves. But it's really targeted at our 3 to 5 year business plan and to make it more profitable. So to have better margins, to try and find ounces that are more economical than the ones that we have in our mine plan now. And so as some of our pits get more mature, the ounces get deeper, the pushbacks required get bigger. It's not that they're not worth doing, and it's not that they're not profitable at $1,300 gold. But we've got a tremendous land package here with the ability to find some more profitable ounces that are close to the mill that we can get access to in the near term and fit into the mine plan, not at the end, but in 2022, in 2023. And again, just focusing on trying to make the business better, not trying to spend money just to produce nice drill results. That'll be a nice consequence of it, and hopefully the market gets excited about it in a good macro environment here. But it's really around making the business better.
Okay, so you've switched the business model into one that understands it's about making money. So great, I get that. Cutting costs, absolutely, of course, what you should be doing, but there's only so far you can go with that. Okay, there's a point at which the process is in place and hopefully nothing goes wrong and you can maintain an AISC, which is, whatever target you're aiming for. $100 is, I say, that's a big deal. It's a meaningful deal. But there's a point at which it's optimized and there's no point in spending time optimizing any further because it's just disproportionate returns, right? Second, exploration. You are sitting on a large land package. What do you know about what you've got at the moment? What's the potential that's in there? Have holes been drilled? Have you got data? What do you know?
Yeah, so over the first 3 years of commercial production, the company really did very little in the way of what I would call meaningful exploration, i.e. drilling. But that's not to say that they didn't do a lot of work on prospectivity. And so, combining the works of the many operators that have worked on this gold belt over the years into a proper prospectivity analysis or a database of all the layers of soil geochemistry, airborne geophysics, analyzing all those layers of data collectively as one data package is something that we did spend a lot of time on to get ready to be able to do exploration. And we just never had the balance sheet to commit to being able to do it. So now that we're there, we've got a commitment there for $10 million a year, $10 million for this year, pardon me. Certainly success driven. If we have success, there's certainly the ability to divert more funds into that if we see it's worthwhile. And we're really looking at 3 areas of exploration where we see tremendous potential to add to the business case here. First and foremost is over 4 years of mining. We've been averaging about 250,000 ounces a year, call it, of depletion from the reserve base. And so that's 1 million ounces of reserves that are gone. And we've never really made any effort to try and replace those reserves. So first and foremost, in and around some of the pits where we're currently mining, we've already made the infrastructure investment. We already have roads. We already have truck shops established at the pits, etc. Very little, obviously we're mining there now, or we will be in 2021 on some of these. About half of our budget is going into drilling in and around those pits. And so we're very confident that we're going to have the ability to replace depletion in our program right now. We've got 4 drills turning. We've got a 38,000 meter drill program planned. The results are coming. Right now we're focused on in and around the pits where we're mining. And we believe that we can replace depletion with the program we've outlined for 2020 and 2021. So call it roughly 500,000 ounces of additional reserves that would allow us to just keep running those pits, to just keep going, to keep mining there. And it effectively pushes out some of our higher cost ounces in the middle of our mine plan.
That's interesting. Sorry, was there a third?
And then second, I was still, second is we do have our main pit, Encran, which is where we've been mining ore for the last 4 years. It's been the main source of ore. It's gone through 2 phases of production. We've got a 3rd phase to access there. There is about 600,000 ounces of reserves, but it does require a fairly substantial pushback. Again, worth doing at $1,300 gold, which is where we stated our reserves. Certainly very attractive at $1,700 gold, but it does consume some of our cash flow over the period of, it's scheduled to start in late 2022. And it'll take about 1.5 years to get in there and really access those reserves. So what we're targeting with our second half of our exploration program this year is we do have one particular trend which we think can be a new deposit. It's located about 6 miles or 10 kilometers south of the processing plant. It's called Tantachrome Miradani. It's a ground that we acquired from Anglo a few years ago. It's about a 3 kilometer long, 2 mile long trend of mineralization. We've got some drill holes into the Tantachrome area in particular. We believe that has a meaningful capability to defer Encran Cut 3 for some period of time, which is, again, maybe even replace that 600,000 ounces or push that 600,000 ounces of reserves out. So really, as I said, we're looking at exploration on those 2 prongs of not necessarily in elongating the mine life. It will naturally do that, but making that 3 to 5 year business plan better. And by better, I mean more economic. And then finally, with this land package, there's 21,000 hectares of ground here. We own the majority of the Asanko Gold Belt. That's where the name Asanko Gold Mine comes from, a shortened version of that. And it's largely been unexplored. We do have these targets that we're working on this year that we've delineated, but we've also got some more greenfield potential to, what's going to be our next. As you know, our mine is anchored by 2 main deposits, Encran to the south and Asasi to the north, where our 2.4 million ounces of reserves sit. What's finding the next Asasi or the next Encran? So we are doing a bit of background work on that this year. It's not expensive work, but it's more groundwork to prepare for an eventual drill program. So I think the answer to your question, we're going to be mining gold here for a long time. Okay.
I guess it comes back to cash is a wonderful thing. It's giving you lots of optionality. I'm going to ask the question. I can't imagine that I think I know the answer, but do you feel under any pressure whatsoever from any of the institutional shareholders, which it seems to be somewhere in the region of about 60% of your shareholder register? Are they asking you to move quickly? Because exploration is, obviously it's cheap, but it's slow. I appreciate you sitting on a large land bank. Do they want you to go and raise some more money, do some M&A and get some scale to what you're doing? There's a cost to that. And I think I know the answer, but what's the conversation with institutions been like?
Yeah, so first on the exploration front at the Asanko Gold Mine, I think, there always is, I think could be a case for putting more money into exploration, particularly given the amount of cash that the asset is generating. Right now we've got a meaningful program where we've gone from essentially doing no drilling for a period of, 5 or 6 years while we built the mine and got it into production, to ramping that up to what's quite a lot of activity. There's a significant amount of drill core coming out here, 4 drill rigs turning full time with a 5th one arriving. That's a big step up, and we want to make sure that we, create the most value that we can from those exploration results. Might we amp it up further? I suspect it's probably possible, but I think that'll be success based. So let's see how this first round turns out. We're starting to get some nice results from some of the drilling already. We'll be publishing those to the market here, and certainly in Q3. And there could be a good business case for doing more exploration. You're right. Now, when we look at what other things might Galiano do, which is I think where you're getting to with all of this, is certainly, I think as we go back a year, one of the reasons coming back here was I did see that we have the potential to create a sustainable business. And by sustainable business, I do believe that in mining, you do have to have more than one asset running. We talked about, the pushback of the Nkran pit, the capital reinvestment. We talked about mining being a capital intensive business, whether it's open pit or underground. There's cycles of development capital that need to be spent on operations. And if you only have one mine and you mistime that cycle it coincides with a rise in gold price where you're actually putting all the money back in the ground, it can be challenging. So you can see the case to have 2 or 3 businesses that are running where you can plan those cycles properly. You can generate sustainable cash flow across all of the metal price cycles that are reasonable. And that's where you can have a sustainable dividend returning capital to shareholders. So, the intention certainly of coming back here was to do that, to create a sustainable business. And we don't have to be in a hurry to do it. We're certainly not under any pressure from our institutional shareholders to go and run out and do something. But I think the way we look at M&A is perhaps a bit different than maybe when I worked at Placer Dome in the early 2000s, where, getting bigger for the sake of getting bigger was very important. Because companies traded at 2 times NAV, no one really ever cared whether the mine generated cash flow or not. They just looked at how fast can you build NAV. There was incentive to just continue to do deals, and that's certainly not the case, and it won't be the case here. Where from our perspective, any acquisition that we look at doing, whether it's a merger, whether it's acquiring a producing asset from a major, would only get done if it makes our business better. So that's the rationale that we use when we're trying to look at these things.
Okay, well, I like the fact that there's a rationale to all of this, because sometimes people just wander from one point to the next, hoping just to survive. So look, I mean, I appreciate you've kind of laid out the plan there. I think from what you're saying, there's no kind of big moves. This is about getting what you've got done right, not going crazy with the money that you've got. Again, we see that where people get money and then they feel they've got to go and do something big. But that doesn't sound like it's your modus operandi.
That certainly doesn't have to be. I think that's the point. Is it? I think you have to be in this industry. There are not a lot of opportunities that are available. So I think you have to be continuously working on looking at opportunities. And sometimes when the opportunity presents itself, you need to be ready. And so that's more our focus, is continually evaluating things, looking at things that might make sense to strengthen our business. And if the opportunity presented itself, I'd certainly think that we'd like to take advantage of that. And I think we've got the capability now, and we're positioned with a bit of a refreshed management, refreshed board of directors, where we've changed out some of our key directors, and we've got a team here who's looking to build a sustainable business. And so I think when those opportunities come, and we know they will, we'll certainly be ready.
That's interesting. Yeah, I had noticed this sort of getting a team that's fit for purpose was important. So why? I mean, exactly the name change, but changing the management team. Are you trying to build a company in your own image? I mean, what's the thought process here?
Yeah, so the name change, I think, is reflective of predominantly 2 things. Is that firstly, there is a refreshed board and management here, and it is nice to turn the page. And we think it reflects the change in philosophy, away from the messaging of we're going to continue to invest capital and build the Asanko Gold Mine into something in an enormous entity, to an entity that's focused on running a sustainable business and generating cash flow. That certainly is a shift, and changing the name helps turn that page in that history. And there's also an element here, though, of practicality that we rightly or wrongly named the mine the Asanko Gold Mine. As I said, the mine is a 50-50 joint venture now between Gold Fields and Galiano. When the company was named Asanko Gold, and you're trying to explain to new shareholders that yes, we operate the Asanko Gold Mine, but that's a joint venture, and Asanko Gold Inc. is separate. That messaging was sometimes difficult to convey. So I think this also tidies up that story quite nicely, so that if we eventually have more than one asset, it's clear that Galiano is a corporate entity. We operate the Asanko Gold Mine in Ghana, and that's a joint venture between ourselves and Gold Fields. So it also tidied that up nicely as well.
Okay. And again, so what would you say to people looking at this project? And your existing shareholders, I guess they've got to be pleased. You had a bit of a dip like everyone else, March time, but you're starting a bit of growth in the share price. But what type of company are people buying into here? You're dividend paying, great, unusual, but without the kind of growth story to it, the speed at which the growth story actually happens, do you think the shares can continue, or is it just going to be a steady growth or flatlining going forward? Where's the excitement come from?
Yeah, if we look at the excitement in terms of the equity valuation as it sits now, I think that there's still plenty of room to go here. I mean, this is a very strong macro environment for gold. I don't think Galiano has fully re-rated into that macro environment. I think there was the main pushback that we get beyond, as you say, our institutional shareholder base. If you look at 4 or 5 names, they control 60% of the issued and outstanding shares. Those are very stable shareholdings, good supportive shareholders who are, have been long supporters of the business and really like the direction we're taking the company. But how do we get those new names into the business? How do we create an exciting story for what's coming next? And that's, I think, still has some room to run, and quite a bit of room, in fact. And I do think that delivering is something that the company didn't do well over the first 3 years of commercial production. And I think we're slowly recovering from that now. We've started to see volumes increase on both New York and in Toronto. We've started to see a lot more investor interest in the story. We are still seeing, though, a lot of wait and see. You said you were going to produce a life of mine plan that shows low capital and 10 years of mine life. Let's see that. Okay, we delivered that in February. That was only a few months ago. You said you were going to produce this year between 225 and 245,000 ounces of gold at $1,000 to $1,100 an ounce. Let's see you do that for 2020. And so we've had a great first quarter. We're having another good second quarter. So I think there's an element of steady here. We'll start to attract some new investment, and there will be some excitement around just doing what we said we were going to do. I think in this market, some exciting exploration drill results are not going to hurt. Let's face it. That's not the reason we're doing it, but sprinkling on some really nice exploration intercepts on top of what is a story of a mine delivering into its guidance, I think will be powerful for 2020.
Okay, Greg, thank you so much for running through that story. I like this. It's not quite slow and steady. I think it'll be a bit unfair, but consistent and robustness to the plan. We like the free cash flow is obviously very attractive for anyone, and we look forward to maybe catching up with you and understanding when you start delivering more of these targets that you're aiming for, and hopefully you can accelerate the exploration plan somewhat.
Absolutely. Well, let's look forward to that success in Q3, and thank you very much for having me. I think it's been a great introduction, and appreciate your time.